Hi guys, I'm Jack, and in this video we are going to discuss about the issue of corporate social responsibility and sustainability in respect of accounting. So, corporate social responsibility is a view of the corporation and its role in society that assumes a responsibility among firms to pursue goals in addition to profit maximization and a responsibility among a firm's stakeholders to hold the firm accountable for its actions. While sustainability is defined as development that meets the needs of the present world without compromising the ability of future generations to meet their own needs. And thus, to let CSR and sustainability presentable, there are roles for accountants to promote sustainable practices. And first, we bear the role of communication. As the presentation of a sustainability reporting is still immature, accountants should be responsible for setting up appropriate reporting framework which can integrate sustainability issues with the business model. So the report could present in a true and fair view to the report users. And yet, sustainability reporting is not about adding more information for the public reporting. It's about making connections and holistic thinking, and thereby reducing the reporting complexity and burden. And secondly, we share the role of being an analysis. Accounting comes in several shapes and sizes and is oriented towards the purpose of the recipients. For example, financial accounting reflects company profitability and management accounting responsible for budgeting to coordinate the company activities. And therefore, even in promoting sustainable practices, we should stick to our primary duty, which is to provide the financial information and assist in company budgeting and advise the management. And then we also act as a bookkeeper. We collect and file environmental and social data for future audit purpose and record tracking. And then there are some kind of tensions exist in sustainability reporting and other side outside oriented information. And the most serious tension is the holism and the snapshot perspective. Reports are reflecting the assets and situations of a company at a specific time. But however, sustainable development is a continuous and has a long-term effect. It is difficult to quantify it in numerical expression for a specific time, and such conflicts would create noise to the quality of the report and making its figures unreliable. The reporting method is another tension. Currently, there is no standardized way for sustainability reporting. Accounting firms are just following separate reporting standards for their clients, and these variations create conflicts to investors as accounting principles might be indifferent and so to affect their decision-making process. And specifically for production and supply chains, there are conflicts in bringing comprehensive and considering all sustainability issues and the need to focus on relevant key aspects. And this kind of problem and this kind of tension is actually kind of like the snapshot and holism issue. I agree that it is inevitable that businesses develop some kind of facade as they can share some benefit from it. For example, the rational facade allowed to have economic benefit and the progressive facade to embrace the new technologies and reputation facade to show sensitive to society and environment. Yet, from the perspective of accounting, building such facade should be extremely careful as the core value of accounting is prudent, which or also conservatism. This is the core value of accounting, and we should not build any facade that will overstate the performance of the company during preparing our reports or giving advice. The provision of corporate social responsibility information brings some measurable benefits. First, research has found that firms providing superior CSR reporting tends to attract dedicated institutional investors and analyst coverage, which has lower absolute forecast errors. With the institutional investors and a transparent information sharing, risk can be evaluated more accurately by investors and therefore lowering their cost of capital. And plus, researchers also shows that it can raise more capital during the SEO. This could be explained by recent trends in corporate social responsibility that investors are more likely to be attracted to and continue to support companies that demonstrate a commitment not only to employees and customers, but also to causes and organizations that impact the lives of others. As for the role for the public sector in promoting sustainability reporting, I believe public sector should focus on making the connections and encouraging holistic thinking. Quoted directly from the CPA Australia, public sector should prepare the framework of sustainability reports and standardize the content which can cover the overall performance of an agency. And in addition, public sector should also develop reports of policy or strategies, such as an environment plan or sustainability strategy for private sectors as a reference. Corporate social responsibility is surely still a developing model and throughout the globe, and it needs communications among stakeholders, and therefore public sector should be the role model and promote sustainability reporting to private sector. And this is the end of my presentation. Hope you enjoyed. Thank you.